The market for electric vehicles is seeing unprecedented expansion. In 2020, the number of electric vehicles in use around the world was expected to increase by 43% to more than 10 million vehicles worldwide. Furthermore, with 4.5 million electric vehicles on the road, China has the biggest number of EVs in the world. The growth potential of electric vehicles cannot be overstated, there's no doubt about that. With low-cost, high-quality manufacturing potential, as well as a large local market, Chinese electric vehicle manufacturers appear to be well-positioned for long-term success. In today's video, we'll discuss billionaire Ray Dalio and his investments in China, as well as the Nio Corporation stock. What resulted in his losses and what aided in his recovery? Stay tuned for that. Welcome back to New Vehicle Media, your go-to channel for EV stock. Quick reminder that subscribing's free and liking the video helps YouTube suggest similar content. Comments are appreciated and featured in upcoming videos. Mr. Dalio founded Bridgewater Associates in 1975, and he currently serves as its chairman and co-chief investment officer. Furthermore, he is the author of the New York Times #1 best-selling book, Principles, which describes his work and life principles that serve as the core of Bridgewater's distinctive culture and serve as the cornerstone of his and Bridgewater's success. The company is a prominent asset management firm dedicated to providing unique insight and partnering to the world's most sophisticated institutional investors. According to billionaire investor Ray Dalio, China's expanding global influence has enormous ramifications for the entire world. He believes the United States is hampered by skyrocketing debt, populism, and a divided political system. Furthermore, he believes that China's development is ushering in a new global order, with Beijing at the center of it, according to the founder of the $138 billion Bridgewater Associates hedge fund, the world's largest in terms of assets. Ray Dalio History with China. Bridgewater Associates, the world's largest hedge fund, suffered some losses on its investments in Chinese education and technology stocks during the first quarter of this year, before the market began to decline in the second quarter. Its bets on 3 Chinese Tesla competitors were a huge success, and the company made a decent profit. The company's holdings in New Oriental Education and Technology, Tal Education, Gaotu Tech Edu, JD.com, and Pinduoduo experienced some of the most significant reductions in value. It increased its holdings in Li Auto and Xpeng while decreasing its holdings in Nio, 3 of the most significant competitors to Tesla's dominion in the Chinese mainland's electric vehicle market. The increase in their stock prices contributed to the company's overall China play remaining profitable. According to the fund's second quarter statement, it held shares in at least 37 companies under its China assets valued approximately $1.2 billion. The company's top 5 performers on June 30, 2021 were Alibaba Group Holding, Pinduoduo, JD.com, Nio, and Baidu, with a combined market capitalization of $719 million. Bridgewater and Nio. The world's largest hedge fund, Bridgewater, with over $130 billion in assets under management, held 856,026 shares of Nio at the end of June 2020, which were valued at $6.61 million. By September 30, 2020, it had approximately 1,569,456 shares of Nio, according to its 13F filing, an increase of 83.34% over the previous number of shares held by the firm. The Nio stock was valued at $33.3 million. Financial data firm Fintel indicates that Nio is owned by institutional investors in an amount of $510,960,791, with a market value of $27 billion. Institutional ownership now accounts for around 50.5% of Nio's 1.82 billion outstanding shares. Growing interest from institutional investors demonstrates their growing confidence in the Chinese electric vehicle manufacturer and its prospects. This is in contrast to Citroen's call, which stated that the company's valuation was unsustainable, which, to be honest, almost every EV manufacturer is. We did see, however, that the hedge fund did lower the amount of its Nio stock that they held. They did not provide any explanation for why they sold some Nio shares and chose to invest in Li Auto and Xpeng as their investments. There could be a variety of factors contributing to this. It is possible that the hedge fund could desire to diversify its portfolio by including assets that are less volatile. This might explain why they invested in Li Auto, which has consistently been the least risky company on the market for quite some time. Furthermore, the stock has been trading and hovering over $120 per share for quite some time. The second factor could be China's crackdown on a variety of education-related technological businesses. A negative signal was issued to the market, which resulted in a severe sell-off in the Nio stock. Given the major regulatory worries in 2021, investors were usually apprehensive about whether it was safe to invest in Chinese enterprises. The conclusion: during the previous decade, China's electric vehicle industry has experienced significant growth and development. China has stimulated EV innovation by encouraging the use of electric vehicles through public policy initiatives and fiscal support. Nio, Xpeng, Li Auto, and Kandi, among other electric vehicle companies, have seen their stock prices surge. While electric vehicle stocks are currently hot on the market, making them appear like an unmissable purchasing opportunity, investors must bear the risks and challenges in mind while making their decisions. Due to their record valuations, some investors may believe that they are investing in a stock bubble at this time, which might burst at any moment. This is why it is important to conduct thorough study and to pay attention to what hedge funds, such as Bridgewater, are doing, since they are among the best in the business of analysis. Even though Nio started the year on shaking ground in the previous year 2020, the company made up for lost territory in the following year 2021. This stock has seen ups and downs due to industry and government ties, but on the whole, the company appears to be a solid investment. Despite the fact that the stock's pace has been slowed by the market, Nio is a serious contender in the development and manufacture of electric vehicles in China. Mr. DLVQO liquidated all of his Nio stock and pocketed a handsome profit as a result. He sold his Nio shares because he was uncertain about the tensions between the US and China, as well as the potential delisting of some Chinese stocks in the future. That should wrap things up for today. Keep in mind that subscribing is still free and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.